Dr. Deuk with the Deuk Spine Institute and another episode of Spine Scams Exposed. Today we're going to be talking about a scam that has been going on for decades in medicine and healthcare. It involves investment of capital into what are called service lines or medical services that are highly profitable. These investments are made by venture capitalists or private equity. These are investors that are looking to deposit money into a company in exchange for really big returns on their investment. If you invest your money, you probably get somewhere around 5 to 10% return on investment, depending on what you're investing in, whether it's real estate or it's the stock market. Bonds aren't that high, but the kind of investments that are available to the public, we generally would get somewhere around 5 to 10% return on investment on a good year. Private equity, on the other hand, expects in return on investments anywhere from 20 to 50 to 100% of the money they invest. And they also have a shorter horizon for investment, meaning they expect all that money to get back to them quickly before the end of the year. So what are private equity firms investing in? Well, they're investing in several different areas of medicine, in particular in spine care and orthopedics. So we're going to look at some of the private equity investments going on in orthopedics and spine. And the reason they're on scams is because they're basically taking big money and investing it into companies to promote and market devices and technologies that really don't work. I'll use robotics as an example. Spine robotics, honestly, there's no need for spinal robotics, okay? But private equity investments dump money into these companies that make robots for the spine, and then they have a huge push for hospitals to buy these robots. They have a huge push for doctors to use the robots so that they make that money on sales. And then they flip their company and they go public, or they sell the stocks on the company and make a profit. Meanwhile, who gets stuck footing the bill for those expensive procedures? The patients do. Who benefits from those expensive technologies? The big companies and venture capitalists, private equity firms do. So that's why we're talking about it on Spine Scams Exposed. First title, Private Equity Continues to Invest in Orthopedics, 13 transactions. This came out on October 19th. It's just about a month ago. And you can see here are 13 key deals in orthopedics. Physicians Regional Healthcare System teamed with Healthcare Outcome Performance Company, a private equity-backed practice management firm in Phoenix. What does that mean, a private equity-backed practice management firm? This is a practice management firm. They come in and they basically tell the doctors how to practice medicine. What do you think they're going to tell those doctors? Well, number one, they're going to tell them to start ramping up procedures that generate more money. Okay, so if you've got a pain management group and you're doing, say, maybe 10 spinal cord stimulator implants every year, those 10 spinal cord stimulator implants are generating about $350,000 in revenue per year. So this company would come in, buy your company, and then they would sit down with the doctors and say, hey, each of you need to put in 10 spinal cord stimulators this year. We want 10 times more spinal cord stimulator procedures. Then their revenue goes from $350,000 that year up to $3.5 million. So you see how that buying of the company, the doctors make a little money, but then you got somebody telling you to produce, and basically change the way you practice. And now you're putting in expensive things in patients they don't need. So then you see a rise in spinal cord stimulator implantation, a rise in morphine pump implantation, a rise in mild procedures, a rise in interspinous devices being put in, and guess who's putting them in? That's the medical practices and doctors that are being bought up by private equity, because now they've got a taskmaster whipping them on the back saying, hey, go do more of these expensive procedures so we can make some profit. And that's why it's a spine scam, because the kind of procedures they're doing aren't really helping patients. There are much better treatments out there, but they're cheaper, and there's no money really to be made by venture capitalists. You can look at the list here. I'm not going to go through all the details, but all of these are basically private equity buying into musculoskeletal practices, buying into pain management practices and orthopedic practices with the same common goal: get those doctors in that practice to do more surgeries and procedures that generate more revenue and profits for the new investor, the venture capitalist. All right, we're going to take a look because this doesn't just happen in outpatient clinics and private clinics. It also happens in hospitals. Here's an example of hospital service lines shift after private equity acquisition. Study finds. So this study was done looking at hospitals, and it was published in November this month in Health Affairs. And it found that hospitals that are purchased or acquired by private equity firms are more likely to add profitable hospital service lines than non-acquired hospitals. What are profitable hospital service lines? That's orthopedic surgery, pain management, the type of procedures that generate good revenues for the hospital or the investor and make them wealthier. It looked at basically private equity hospital acquisitions that occurred from January 2006 to December 31st, 2015. And it studied how their hospital services that they offered, that's like obstetrics and gynecology, pain medicine, orthopedics, spine surgery, total joints. Those are all service lines. And here you go. Acquired hospitals are more likely to move towards profitable technologies like robotic surgery. I was talking about earlier, digital mammography. Digital mammography is basically a way of doing a check on women's breasts every year to look for breast cancer. And so digital mammography is a little bit more expensive, okay? And the profit margins are higher. The point here is not really targeting digital mammography as a bad thing. It's actually a good thing. The point here is that Wall Street starts to run hospitals, clinics, and doctors. They're going to push the system towards profit over quality of care. That's the problem.